Hello guys, welcome back to Christian Finance for your regular financial content. And today we're going to be talking about the one and only Michael Burry and what he has to say about the markets in the short to midterm, as well as always I'll give you my own personal perspective on what I think is going to be happening with data and proof of course to back it all up. In case you don't know who he is, Michael is the guy who predicted the 2008 housing market crisis. As well, if you guys have seen The Big Short, then Christian Bale is the one playing him in the movie. So, as someone who's in the finance space, I look up to him quite a lot, as do many others. Now, this right here is a very interesting tweet of his, and essentially it says last two inflationary periods in the US, 40s and 50s and the 70s, each had three distinct inflationary peaks. So 20s, the post-flu and World War One nihilism, 40s, post-war spend and the baby boom, 70s bad energy and Fed policy, and 2020s obviously right now really when 2022 is when the big crash and recession occurred, all of the above. And it was majorly of course due to the 2020 printing which started to cause everything. Yep, and firstly right over here I do want us to take a look at the inflation rate over the last 7 months, and it really has been from as low as 8.2 to as high as 9.1, which is ultimately a 40-year high, and it's largely due to all the money printing that we had going on in 2020, trillions on trillions just in the US alone. But people have to keep in mind the printing didn't start in 2020. It actually started after the 2008 market housing crisis. It's just that back then the printing wasn't as much and it accumulated over time, right? And when they started really printing heavily, trillions per year since 2020, that's when the disaster really started to show up clearly. And yes, right now we did have a 7.7, which is good for the last month of October. We're gonna need a few lower CPIs to come in a row for me to start feeling confident about that data in specific. Of course, we still have the war happening, and that one is lasting a long time, and I think it will keep lasting. The effects are hardest on the economic factors in Europe, that's for sure. But really the whole world is feeling it, right? If we're being completely honest. Also, we have interest rates, which right now are about 4% in the US. Some experts are predicting that we're gonna go as high as 5%. Personally, I don't see it, especially with the lower inflation rate we just came in, which is great. I think we might peak out at 4.25 to 4.5, but we'll just have to wait and see what happens there. Of course, we still have the pandemic happening. Now with that, guys, I just wanted to quickly ask you to like the video if you enjoyed it. More importantly, subscribe to the channel, hit the notification bell so you get notified every single time I upload. I do put a lot of effort into giving you guys these regular financial updates. Only thing I ask in return, guys, subscribe to the channel. Also, if you want to work on me one-on-one, just let me know down below in the comment section. Whatever it is in the finance space or men's self-improvement space, I can help you out at a very reasonable rate. I promise to over-deliver in the value that I give you. Now, this was an interesting tweet actually that he did. This was coming because it has always been this way before. How anyone over the age of 40 did not see it coming is a riddle. The answer being greed. And what he's talking about is a cycle of how over time we're in a bear market, we're low, and then we rise. And then typically after a high rise, and typically it comes down to psychology, because when prices are at the bottom, people think they're going to keep dropping and no one wants to buy down here, even though that's the right move as long as you've done your research on the specific stock or crypto. And when we're supposed to sell, which is at the top, people typically don't want to do that because they think it's going to keep going higher. And that's when they get served and the crash begins and they sell at the bottom, right? So that's just a cycle that he's talking about. Perfect example with crypto. About a year ago, we topped out at 69,000. Obviously, right now, we're at 16.7 or 16.8, which is about a quarter of where we were just a year ago. And people here wanted to keep buying at the high peaks, right? They didn't want to sell. And of course, down here at the 16.7, nobody wants to buy, right? They're going to wait until we start peaking again, right? That's just the majority of people. And my recommendation for those folks is do your research, but if you're satisfied with your research and you have high conviction on a play, for your specific benefit, try to dollar cost average at least a little bit at a downward price, right? And try to dollar cost average out of your position at the peak price, right? You just have much better odds for success this way, right? As Warren Buffett always says, Be greedy when others are fearful, and be fearful when others are greedy. And I do want to end it off with something that I keep referring back to over and over again, but I think it's important to really hammer it down for you guys. And that's Warren Buffett, that he was buying more stocks in the beginning of 2022 and he's buying more now. Here's what he does. Last year when we were hitting peak prices, he was either selling or holding, right? Right now, this year that we've been much lower, we've been dollar cost averaging into positions or holding. And one thing that he's very famous for is that the lower a stock goes that he believes in, the more he will buy, right? That's very key. I want to just tell you guys that yes, even though it's tough times, we all get it. I'm sure you get it. During recession, this is the time that most millionaires and billionaires are created, right? In difficult times, this is where a lot of people collapse, and the ones that are able to adapt really succeed. Think about how many people collapsed during the pandemic, the beginning of it, and how many people were able to adapt and were able to take advantage of the opportunity and had a business boom and really, really succeed, right? Countless examples. So do your research, and on your high conviction plays, when the prices are low, that's the time to dollar cost average. As long as, once again, I repeat, you've done your research and it is one of your high conviction plays. Of course, you will have other things such as emergency fund that I keep talking about. Make sure you don't have any debt for the invest before you invest. Make sure you have an emergency fund as well of at least 2 months of expenses. Only then do I recommend investing, but research. With that, guys, the video is over. Let me know other similar financial content you'd like me to do next. Once again, subscribe to the channel, and as always, stay diversified.